Okay, so this is a test. We start at almost 6 o'clock. Okay, good day, everybody. Good day, listeners and viewers here. My name is Olatunji, and today we're talking about how to improve your access to finance for your business. But basically today, I just want to focus on frequently asked questions and just give very genuine and quick answers to them. If you are joining me on Instagram, please post your questions on financing and access to finance. Hello, everybody. It's awesome and great to have you here. My name is Olatunji, and today we're going to talk about improving your access to finance for your business. Today, I would specifically focus on frequently asked questions that we've come across, especially in our community, outlier business community. I work at the Business Outliers. I'm the founder of a consulting called the Business Outliers. So we help small and medium enterprises increase or improve their access to finance and generally help them improve and put them on the fast track of business growth. So if you have any questions, if you are watching me live on Instagram, if you have any specific questions on accessing finance or improving your access to finance, you can just go ahead to drop the question in the comment section. Otherwise, you can also join our WhatsApp community. So we're building a brand new WhatsApp community, and it's called Outlier Business Network. So in this WhatsApp community, we'll give you no fluff. And so when I say no fluff, very smart and great insights where we'll be able to share business opportunities, investment opportunities, but more importantly, business growth opportunities amongst one another. So this community is expected to also grow beyond WhatsApp to a bigger platform, but we're just starting with WhatsApp. So I'll quickly go ahead. So it's 6:03 now, and I think we've spent enough time in introducing. I'll quickly go through now to ask, to just begin to answer. So I'm going to start with basic, very, very basic, and almost like we calculate a no-brainer kind of questions. But I think it's important to start with the basic because it will help any applicant, especially for a loan. So now we're focusing on finance in terms of bank loans or non-bank financial institutions. So we focus on finance in that perspective. So I'll start with those basic questions, frequently asked questions to help you fast track your loan application process or improve your ability to access a loan for your growing business. After that, I go a bit more to talk about let me just say a bit more controversial areas of conversation. So the first thing is, what information would you need when you want to access a loan from? Firstly, I mentioned bank and I mentioned non-bank financial institutions. So basically, you just need basic business information. Your first application will just have most of the kind of business information that you feel. Most financial institutions, banks, and the fintech platforms, they will have a website. They will have a website for you to quickly fill the application. So they will ask about the amounts you need, or you want to use it for. Things like your cash flow over the past couple of months would also come in handy. So it's good for you to have this kind of information written somewhere, such that when you want to fill the application, you won't go back and forth. Yeah, some go to the extent of asking for your business details. So what are the directors of this company? What are the registration documents? What kind of registration do you have? What is your location? They would want to see ID cards of the business owners as well. They would want to see those kind of information. Some can go to the extent of asking for your tax information. I'm not quite sure why that is so, but the only thing that comes to my mind, if you're asking for tax information, would be that maybe you want to verify if this business is really an existing business, to the point that you didn't just register the business and keep the registration document, but just to see more of transaction. Of course, you'll submit your bank statement, that would give them the kind of information that will be valuable or useful for analysis, because they need to analyze your cash flow to arrive at the amount of financing that they want to give to you at the point in time. So the second question that I've seen and a lot of people have asked for SME. So of course, you know that in the past, before you could apply for a loan, you have to walk to a bank, a commercial bank or a microfinance bank. You have to get to one of their branches or one of their locations. But the good part now is that a lot of banks, even commercial banks and fintech or banks as well, they easily give you access to finance by applying on their website. So you can easily apply on their website for online, on an online platform, whether their website or an app or something, for a loan or a line of credit for the business that you want to do. So that makes it way easier, and it also helps them reach a wider variety of businesses that can help. So, and it also makes it easy for you to apply from anywhere, whether on a phone, a tablet, or a laptop. So that makes things even way more easier for you. Now, another question that we've seen in our from our community members would be that once the loan or line of credit is approved, how long does it take? So basically, let me just take you through what's called like the approval process. So first of all, the loan request will be received perhaps via the customer service. So let's just take, for instance, it's on a platform, on a website platform or an app or something. I would expect them to have the first contact person, maybe like a customer service person, to review that loan and then move it to someone, let's just call that person a loan officer or an account officer or something. So that's like the first level. So the first level, the first customer service will check to ensure that the documents that they requested for, you've provided everything completely, and then move that to a loan officer like an account officer. So the account officer looks at it, and then if it's interesting, if it's kind of what they want to pursue, and I'm talking about small business loans here, most fintechs or even larger banks will want to assess that and send it to a more senior person to review. So after that is reviewed, it will be sent to the management of the organization where they would approve. So you can see that there's a process around this. So documentation, getting it complete, going back and forth, and then getting finally approved. Of course, when it gets to the approval level, it could be sent back to the originator to reassess or ask for more information, depending on the clarity that has been explained in the document. So that's kind of document. Sometimes it's called a FAM. So it's a facility approval memo. That's internal jargon really of banks and fintechs and all that. So that's a process. Of course, some other organizations that give smaller loan amounts, they might not even go through that kind of extended process. So they would have a more automated fintech system, such that using AI to easily assess or reject your loans based on fintech. But if it's a bit more, if the amount is higher, they have to go through a more rigorous and a very rigorous and detailed approval process. So once your loan is approved, of course, depending on the kind of loan, there are what they call conditions precedent to draw down. So what are the conditions that you need to meet before you are able to draw down? So if it's a secured loan, you need to get the security in place. If it's not secured loan, there has to still be some documents, perhaps maybe guarantors or identifications or even site visits, all those kind of things might be conditions. So they need to fulfill all those conditions precedent before you are able to get the credit in your account. And don't forget, I'm talking about a more stringent approach where we are looking for larger amounts, depending on the organization. So maybe 1 million, 2 million, or 5 million or something. For smaller amounts, less than 500,000, and I'm talking in Naira now, smaller amounts, the process might be more automated where they use a lot of AI to just vet and decide on the volume they're giving and who they're giving. And then they begin to look at your history. So just like I was on a mobile phone network platform, and I requested for a particular data, and someone gave me a code for a particular data package. And he told me that depending on my frequency of use, my limit of how much data I have access to in a month will keep increasing. So banks too tend to have that kind of mindset, such that if your credit, you know, they look at looking like a credit worthiness. So how much you've gotten in the past, how much you've repaid without any issues and all that. So by the time they look at your credit worthiness, they kind of increase your limit, because they begin to look at you like, oh, this is a return customer. This is a customer that has not given us issues, has all the documentation in place, and you know, they begin to improve your, that begins to improve your own access to finance as well. Another question is that, so if I want to access loan from a bank, do I need an account with them? So there are different ways to look at it. If you, traditional banks, and when I say traditional banks, I'm talking about commercial banks in Nigeria, most times you need an account existing with them to be able to access their loans. However, there are a lot of hybrid situations that they've developed this right nowadays. There are a lot of fintechs that are in the system nowadays that you really don't need to have an account with them, you know, if you want to access like an unsecured line of credit, because it's just not so much. The amount is smaller and it's easier for them to get that done without any special account or history with them. Right. The next question is that do they, banks and you know, fintechs and all that, do they fund startups or new projects? So most times the answer would be no. Why? Because a loan for, especially, and I'm talking in Nigerian setting, is often for it's based on cash flow. So cash flow is the first point of contact, the first, whether it's secured or not, the first point of call for repayment has to come from cash flow. So a startup that does not have cash flow, we may not be able to fund. However, if over time you are still a startup, I mean, you can still be ranked as a startup, but you've been in business for a while, you know, yes, definitely you should be able to access. So, you know, so initially I said no. I'm correcting that to say it depends on how long you've been in business, whether you are called a startup or not. As long as you have enough sufficient cash flow to cover the repayment and even the fees and in excess of all that, then yes, you would be eligible. Next question would be that, okay, so I've applied for this loan, and but I do not want to access the loan any longer. Maybe, for instance, I've gotten funding somewhere, and I mean, something similar happened to me. I tried to apply for a line from a Nigerian bank, and we were supposed to fund a certain project that we're doing. And you know, we started the process and application and all that. But really, the reason we wanted to apply was because we were getting a delay from a transaction we had done. We got a delay in receiving our receivables, in getting our payments. And so because of this delay, we needed a short-term loan. But because the process, you know, it took too long, even the payment that we're expecting came in. And so we had to cancel the facility. So because we didn't complete the process, we were not charged any fee. So the question here was that if I change my mind about the financing, maybe before the application process was completed, would I still be charged? The answer, and I stand to say in the most reasonable case, would be no. However, if they've had, if you have some certain understanding with them, if you have signed an agreement with them to say once you applied, you'll be charged. I mean, it doesn't really make sense to me, but that is what will be happen. Exactly, that will happen. Okay, so the next question, we'll talk about security and collateral that most financing institutions ask for. So let's start off by talking about cash backed or no. So let's talk about unsecured. Yes, unsecured business loans that most banks ask for. So security, what kind of securities are available? So I'm starting from unsecured. So basically for unsecured loans, in fact, for me, what is most important is what? Is your cash flow. And I've said that and I cannot say that enough. So for instance, you want to access, let's say 5 million or 3 million to fund an LPO, such that maybe you want to supply some engineering equipment to Shell or to Schlumberger or something. You need that 3 million to just, you know, complete the amount of money that you need. I need to see your cash flow. I need to see the cash flow in your account that is sufficient enough to cover the 3 million that you are requesting for. Because if you do not have enough to cover the amount you are requesting for, then I would not believe that you have the ability to repay. So when I say cover, usually if you are requesting for 3 months, we look at what is the duration of the loan. So is it 6 months, for instance? That's if you're taking the loan for 6 months. What will be your repayment on a monthly basis? So let's say your repayment is about 600,000. I need to be sure that you have not just 600,000, but 600,000 plus our interest, plus our fees, and then enough money left for you to run your business. So basically, we do not want to tie you. So most banks do not want to choke you, when it comes to repayment. So when they talk about cash flow, you kind of even take an assessment of your bank statement to be able to tell them, yes, we can make this repayment back. Now, there are instances where you might not have that cash flow, but if it's an LPO that is backed by maybe a blue chip company and the payment is tied to some payment that is, so at that point they need to confirm the LPO from the sponsor or from the principal company that issued the LPO. So the financing organization, whatever they are called, they would want to confirm the LPO from the issuer, and that's very key for them. So in that situation, they may choose to take the risk that yes, your bank account may not, your cash flow may not be able to cover the funds based on history, but you've done transactions with this particular principal, the issuer of the LPO, for maybe a couple of times, and that gives them the comfort that your business will be able to pay. So that's another thing. Another thing is what determines my interest rate. That's another question. How do I determine interest rates? What makes me pay? What makes a fintech tell me I'm going to pay 6% per month for a particular loan, whereas a commercial bank would say you're going to pay 23% per year, which turns to about 1.2% per month. So what's the difference in that? So firstly, let's start from the basics. The commercial bank, they get funds at a lower rate. They get free funds. So every one of us, will deposit funds, we do transactions. They have a lot of float in terms of funds. And so that makes them get funds easier. Fintechs, on the other hand, may not get funds as easily and as cheaply, not as easily necessarily, but as cheaply as larger institutions. So because of that, their cost of funds is higher, and they throw that back to the customers. Number two, also based on your own individual as a business, your credit rating and your credit worthiness. So when I say credit rating, before the loan is approved, they would have gone through a platform. So on that platform, they see access. They have access to all the loans that you've taken, in the country, and they're able to see how well you've been paying, or how if you have maybe you are defaulting at some point in time and all that. So that kind of creates a credit rating for you and is affected by it affects your access to finance and the interest rate. Yes, I know a lot of times they've put a fixed interest rate, but ideally that should affect your interest rate. And then if you're a return customer, that gives them confidence that you are kind of like good business, so to say. So so now I think I've touched most of the, let me just call it the easy questions and the ones that doesn't require, they're basically like the basics that you need to know or think about while accessing the loan. Next, right, I'm going to talk about more deep matters. And when I say more deep matters, now look at this. Someone has asked in the past that, do I really need a business plan to access finance? And the short and sweet answer is that it really depends, right? We are business plan consultants. We write business plans for startups and larger projects, especially for project finance. And the truth is that business plans, it depends on what you're trying to do. So if you want to just get a short-term loan, mid-term loan, or even long-term loan from a commercial bank, they may not necessarily ask you for a business plan. If you want to get a very soft loan, hard loan, whatever it's called, from a fintech or a lending organization or microfinance, it would not be asking for a business plan. But if you're trying to raise a startup finance in form of a grant or a loan from a development finance organization we're talking BOI, we're talking AFDB, they would ask for a business plan, right? If you're trying to raise venture capital, a business plan, your pitch deck, all those become very, very key and important for you. So like I said earlier, the long and short is, it depends on what you're trying to achieve, depends on where you are at that point in time. And of course, there's a controversy around, is a business plan important when I want to start a business? The answer, of course, also is it depends. It depends on the kind of business. It depends on where you see your business in the future. It depends on, sorry, my phone is ringing. So it depends on where you see your business in the future. It depends on all those kind of things. And give me a second. I need to put my phone on vibrate so that it will not ring anymore. Okay, thank you for that. So it depends on where you see your phone on. It depends on where you see your business in the future. So what I was trying to say is that, do you need a business plan to access finance? It truly, really, really depends. You need a business plan to even start a business. It depends on where you are. It depends on whether you are, you're just looking at, I want to start trading on Jumia. Do I need a business plan for that? Most likely no. But do I want to do an innovative business where I'm trying to raise finance? Do I need a business plan? Of course, the answer is yes. All right. So next is, how do I find the best financing option for my business? And this takes us to, do we need debt, or are we talking about equity, debt, or equity, debt, or equity, debt, or equity? It really depends. So if you are working on a project, there's a project we're working on. We do a lot of projects at Brockville Investment, which is the firm that I sit as the chief executive. At Brockville Investments, we work with project sponsors. Now, do you need, if you have enough equity to do your project, definitely you do not need to take on debt. But most projects that are infrastructure, that are large, say for instance, real estate or construction, they are very heavy, or even agric. They are large projects and they require a lot of funding. So at the end of the day, it's going to be a hybrid or a mix of the different kinds of financing that you have access to. So you have access to the debt, which is much easier, or well, depends. Much, maybe not necessarily say much easier, much desired, yes, more desired by the lender or by the business owner, the sponsor, right? By the sponsor. Why? Because sponsors do not typically want to lose a lot of stake or control in their business, and equity definitely would, make sure you do that. But if you are more in tune to, I just want to borrow these funds and return it quickly, then debt will work. Of course, when you're talking about project finance, you will be in need of project-based finance that is non-recourse, or even as, let's just say, limited recourse to the business. So it's focused on the cash flow of the business for project finance. So in that situation, you might want some debt. But at the end of the day, it's going to be a hybrid for those kind of projects. So the key to take out from this is that if you desire to keep more control of your business that you have, then you would want to go for debt. But if you don't mind getting expertise of maybe venture capital investors or private equity firms where they bring their parties, they come on board as part of the business, then you might want to go for equity. But then at the end of the day, when the chips are down, it has to do, what do you even have access to? That is what you would go for. All right, next frequently asked question is that I went to a Nigerian bank and they were asking for collateral. I did not have any. What do I do? Okay, I think I talked a bit about collateral before. So unfortunately or fortunately, if you look at the concept of collateral, it's like a secondary way out. So I've talked about cash flow as the primary way out, the real, what the lender can fall onto, because it's what they fall to get repayment for the loan that they've given to you. Collateral is secondary. So in case this person is not able to pay, in case this business is not able to pay, what do we do, or how do we get our funds back? That's what collateral does. Collateral in the past could have ranged from shares. I mean, when shares, and I think even till now, before the great crash in around 2009 and thereabouts, the stock market is, in Nigeria is even getting better again. You know, so collateral could be shares. So if you have shares of blue chip companies, that could stand as collateral in some cases. Of course, most times they'll tell you property. So if you are also getting a lease for an equipment, the equipment itself will be the collateral in some cases. But if you do not have any kind of collateral, what do you do? The only option that will be available to you is to seek lenders that do cash flow lending, which is unsecured. And unsecured will mean that, so it depends. So some organizations will not even take anything at all. They expose themselves to larger kind of risk, you know, than others that may ask you to bring a guarantor. So they may ask you to bring a guarantor to secure the loan. So those are the kind of options that will work for you, right? So how do I know what terms to accept from a non-bank financing organization or even from a bank? When I say terms, the loan terms. So basically you would ideally, suppose you're supposed to get an offer letter or an invitation to, you know, to sign like an agreement, like a loan agreement from the organization. So the terms are all written clearly, and it's very important for you to understand the implications of everything that you sign. I've seen a situation where a lady signed as a guarantor for another lady, but if you sign as a guarantor in this firm I'm talking about, it means that if the company A that you're guaranteeing are not able to pay, you, Mr. XYZ, must pay in full. And you know, when it was time to pay, the woman said, please, can you take away my name? I am no longer signing as a guarantor. And she was told, we can't, except the lender provides us with another suitable guarantor that, you know, can stand in your lieu. And then she ended up taking them to court. They went to magistrate court. She spent money on the lawyers and everything. And then the further thing in the agreement also was that if we have to go to court over any kind of situation, the costs, you know, the lawyer's costs, the cost of sitting in the court and everything, you would pay us. So she took them to court. She lost the case, and she still had to pay this firm the cost. So basically, she's owing as a guarantor, and then so it's very important for you to understand those terms before you sign, whether as a guarantor or even someone taking a loan. You need to understand the kind of terms. So when it comes to what terms you should accept, you need to accept the kind of terms that is most suitable and easiest for your business. So what interest rate makes sense for you? If the LPO example I used earlier, if you are you're trying to fund an LPO, did I say LPO? Yeah, right. If you're trying to fund a purchase order, an LPO, you make sure that the interest rate is good enough to the point that, let's say, it costs you, or what you're making is about monthly, maybe 15%, a 6% loan will work, a 7% loan will work for you. But if your margin is basically 8%, would a 6% loan work? That's one. Another thing you need to think about is the tenor, right? So for the longer the tenor, the more costlier the loan becomes, irrespective of the interest rate. So you need to look at the interest rate that works for you. So if you're going to have a longer term loan, would it be worth it to take a high interest rate loan, or would I have to go to a single digit kind of loan, maybe 9% per year? I think you divide by 12, you can see that there's 0 point something, you know, and you can only get that from development institutions like maybe Bank of Industry or AFDD or Ministerial Microfinance Bank and all that. Right. So next question from our community, the Outlier Business Network, is that, okay, so how do non-bank finance, okay, so how do non-bank financing, because I talk about bank and non-bank financing organizations, so how do they work? Who licenses them? So we all know that banks in Nigeria are licensed by the Central Bank of Nigeria, while investment companies are licensed by SEC, Security and Exchange Commission. So non-bank financing organizations, if they are microfinance banks, they are also licensed by Central Bank. But for non-banks, there's actually a law that the state in which they operate, they can get a lending license from that state. So it's the kind of license that some people that used the term used in the past to call loan sharks. So these are the kind of license that some of them can get. So it makes market entry easier for a lot of non-bank financing, because a lot of them can come on board, get a license, and they're able to operate quickly in certain states because they don't have the capacity or the financing to get a CBN license. So it makes it easier for us. So This is my own question or answer to my. So where do I get valuable business growth and financing tips? Get them from Outlier Business Network. Just click a link on the link in my bio. We are currently on WhatsApp, or it's going to go to a bigger platform, but for now we're on WhatsApp because I think it's more personalized, or if I might say, something that is easier to access. So just click on the link in my bio and you'll find access to WhatsApp group that we've dedicated for people or business owners that are looking for high growth and high impact like yours. So finally, before I leave, I just have general business tips to improve your access to finance. Firstly, you need to separate your business from your person. Like I would say, your business must have a life of its own. Your business is like living and breathing. What does that mean? You must not mix your personal finance, irrespective of how broke you want to say you are. You cannot just mix everything together. The business has to be separate. So if you are into trading or consulting, whether you're a lawyer, whatever kind of business you do, your business must have a separate life. You can easily do that by firstly, you need to register the business as an entity on its own. Whether you want to register as a business name or as a limited liability company, it doesn't really matter at the start point where you are. You need to just make sure you do that registration. When you're able to do the registration, then you can open a bank account for that. In fact, if it is so expedient and you're not even able to register, let's say for instance, you cannot even get a business registration document, you can create a separate bank account, a sub account from your existing account. Just make sure that funds for your business, if it's a side also, for instance, you have not gotten to the level, maybe you're still running your 9-to-5 job and you just have this business on the side, maybe you're catering or you're making cookies or baking cakes and all that. It hasn't turned to a full-blown baking business, a full-blown business, but you just want to make sure that you have that track record of what comes to the business and what goes out of the business. In fact, if you wanted to start your business with a certain amount of money, small business, what's side also here, 100,000, 200,000, move that money to a separate account to show that this is the seed, the equity that I started this business with. So it's very key for you to do that. You also need to have general business good tips. You need to learn how to source products from the best location and price perfectly. You don't need to look at pricing around you. When you've looked at the pricing, you do not need to base your own business on what competitors are doing. You just need to understand that, how do I remain more competitive? How do I improve my competitiveness in terms of getting the right product at the best possible pricing, such that I am able to price, at a very marketing, in a very, very good way, basically. Yeah. So finally, and this has strictly to do with loans and access to finance. Understand loan terms, right? You should never rush to sign any offer that you do not understand. If you don't understand it, get a friend to read through and you read, get your lawyer in the office. If you have a legal staff, a legal department, your lawyer must review it first, or a lawyer friend must review it. The legal department must definitely sort that out. And if you don't have a legal department, a lawyer, there are a lot of consultants. You can also reach out to us at the Business Outliers. We can review loan terms for you to be sure that you are making the right decision. If you understand it, you are most likely able to make the best of decisions, right? So I think I'm going to end the session today. I would like to say thank you for every single person that joined via online, joined live, and those of you that are also on Zoom. So thank you for watching. Thank you for your time. So basically, Outlier Business Network is an initiative of the Business Outliers, and we created this to help you grow your business, to create a network that supports, brings to you opportunities and very valuable and sensible answers to your business growth questions. Because basically we want to grow together, and I always believe this, that your success is our success. So as your business consultants, as your advisors, when my business that I've mentored, coached, or advised is successful, it's like a feather to my cap. Once again, you've been listening to me. My name is Olatunji, and I've been your anchor for this session. So join me again next week, Thursday at 6 p.m. when we talk more about business growth.